mentioned conventional loans.
Sure.
I think it's important to talk about loan limitations, right? There are certain criteria that have to be met in terms of loan size. What does that look like for 2 to 4 units?
Yeah, so going into 2024, they have increased the loan limits, which is great, and it helps buyers, and the reason is because when you go over a conforming loan limit, you run into what's called a jumbo loan. And the rates are affected, the loan products are affected, and the guidelines are affected. So the more you can stay within conventional, it just makes things a little bit easier. So going into 2024, 1 unit's gonna be at $750, which is up from last year. 2 units gonna be at about $980, $300, which is great for a 2 unit.
Okay.
3 and 4 unit, we're looking at just over 1.1 million, and then a 4 unit, we're at 1.442.
1.442. Okay, so what you're telling me is for 2 to 4 units, you can spend anywhere from $1 million to essentially $1.5 million and put a minimum.
Yes, and you're within a conforming loan.
Wow, that's great for first-time buyers.
Yeah,
Maybe they don't have a lot of down payment, maybe they can get a closing cost credit, and live super lean with 2 to 4 units additional rental.
absolutely.
Wow,
It's great.
great information. Okay, let's debunk something like we like to do from time to time. Taylor, do you have to put 20% down to purchase a home?
You do not have to put 20% down to purchase a home.
Really?
On a conventional loan, you can go as low as 3% down as a first-time buyer, 5% if you're not a first-time buyer, and on an FHA loan, 3.5% down.
Okay, that's great. So even if you're not a first-time buyer, which we work with those a lot, but even as a second or third-time buyer, you can still put 5% down.
Correct, on a conventional
On a
loan.
conventional loan.
So a lot of opportunity, again, for buyers who come in and purchase a home and not have to bring as much to the closing table, but still be able to start building equity.
Okay, a little follow-up question.
Sure.
Let's say you bought a home 5 years ago. Condo, maybe River North, 2 bedroom, 2 bath. Now you're married, you have a kid, you live in a single family home. Can you still put 5% down on your purchase?
You sure can.
Okay.
And if one person is considered a first-time buyer, you can utilize that 3% down first-time buyer opportunity.
Awesome.
So Mehdi, right now we're seeing still some multiple offer situations. So when you're working with a buyer and they like a property that they want to submit an offer on, how are you helping them stand out through negotiations or what they're offering?
Yeah, so different products, different offers, right? So we work from the city to the suburbs. If you're looking for a house in the suburbs right now, you are still seeing really low inventory, multiple offers. One way that we like to stand out is, first off, we need a solid pre-approval, right? So we need to go to somebody like yourself, make sure that we're rock solid, that we know we can get financing in place, because if you're not a cash buyer, which is also a good way to lock in a good offer, but that doesn't happen for most of us. So a good way is getting a rock solid pre-approval, knowing that everything is fact checked essentially for your pay stubs, how much money do you have, essentially all of that. So another way is as is. If we look at the property and we think it's in good standing, it doesn't mean that we're not going to have an inspection. We're still going to have a licensed inspector come in and check the house for latent defects, malfunctions, things of that nature. But to say that we're not going to ask for credits or repairs in the case of something small, it makes the homeowner feel at ease that they're going to have a simple process. Having a flexible close date, which that's another topic that we can get into, but being able to work with the seller and having a good loan officer that can close a deal in 21 days if they need to, that's also a big item.
Right, and I think too, one thing that I do with a lot of my buyers is when they submit an offer, I'm always happy to call the listing agent just to make them feel a little bit better. It's like, hey, I've gotten these documents, they look good, and just become a little bit more tangible with the agent, because I'm sure there's a lot of times where you get pre-approvals, the loan officer never shows face, and it just makes them feel a little bit more comfortable.
Yeah, it's really important. I mean, for you buyers out there, listen to your team, right? It's really great to have a team where we have an agent and a lender and an attorney and an inspector. Everybody is lined up. It streamlines the process for the buyer and for the seller, and it makes everything look like you're a professional. Okay, so a lot about 2 to 4 units today, but what are some other unique loan products that we have out there, right? We have high interest rates today, a lot of volatility. What can we do to help the buyers?
Sure. So I think there's two that really stand out. One is going to be our doctor loan. Our doctor loan is a 0% down product, which is something you don't see very often in the loan world. No PMI on that product. It's for any MD or DO that is currently practicing in residency, fellowship. They own their own practice, and it's just really great for doctors who are looking to get into a home. It's also 1 to 2 unit primary residences. So if they do want to get into the multi-unit space, it allows them to buy up to a 2 unit, and it's 0% down up to $1 million.
0% down, no PMI.
No PMI.
Okay, what's PMI?
Private mortgage insurance.
Private mortgage insurance.
Private mortgage insurance is
the 3 dirtiest words in our
yes. It gets a bad rep, but it is what it is. Private mortgage insurance is a monthly mortgage insurance that you pay monthly if you have anything less than 20% equity in your home.
Okay. Okay. So there's none of that on a doctor's loan.
None of that on a doctor's loan.
And A&N Mortgage does doctor's loans?
We do.
Wow. Okay. So in my experience, there's not a ton of loan originators that can actually do these types of loans. So that's a great market for the city. Great
product and really good for especially young doctors who are newer practicing, or they are still in fellowship.
Yeah.
Really gracious with student loan debt and how they calculate that. So overall, if you qualify, amazing product. Highly recommend it. And then another loan product that, it's not a specific loan product, but for a lot of self-employed borrowers, I have a lot of buyers that they own businesses or they're self-employed, realtors that I work with, and what they'll do is they write a lot off, right? So their tax returns, the bottom line in their tax returns may not clearly reflect what they necessarily made. So with that, we have products to where we can do bank statement loans, which is where we take 24 months of bank statements, add up any deposits, and we divide by 24 to use as a monthly income. And this allows people who, again, on paper doesn't look like they make much to be able to purchase a home and get pre-approved for enough to purchase the home they want.
Okay, so you guys are doing forensic accounting now.
We sure are.
Okay.
We sure are.
That's great for people in my line of work, for business owners. It is very difficult to have that balancing act where you do have deductions because you're in your business.
Sure.
But you also want to keep your income up, and it can really kind of chop one of our legs off.
Yeah, absolutely. And that's why speaking with a loan officer early on in the buying process, especially in that scenario, is so important, because when tax season comes around and you're filing those, or if you're planning to buy a home, it's good to know, hey, what do I have to do to make sure I qualify? What loan products are out there for my financing situation?
Yeah, and even for me, luckily I'm in this business, so I understand it, but I have constant conversations with lenders like yourself, where we know what it looks like so that I can plan for the future, because you need 2 years of those bank statements to be able to make this program work.
Exactly.
So another important question right now, a couple of years ago, it seems like a myth now that we were looking at sub 3% interest rates in some cases. Right now we're quite a bit higher. What affects the interest rate? How can we lower it if we?
So this is why I will always preach, talk with your loan officer about interest rates, because there's a lot of clickbait out there, a lot of misadvertising out there about interest rates, when there's so many factors that go into what your interest rate is going to be, right? That's going to include the type of property that you're purchasing. A single family versus a condo, there's going to be different price adjustments. What your credit score is. It's going to be the loan product that you're choosing. If you're doing a 30-year fix versus a 15-year fix. If it's a jumbo loan versus a conventional loan, right? There's so many different factors that go into what your interest rate is going to be, that to really know where they're at or what applies to you, you have to be working with someone, and they have to know the full spread of your income, financing scenario.
Wait, so there's not just one answer to this?
No. And I think that just leads into also reading the fine print.
Yeah.
I had a buyer that was under contract, and I gave her the rate, no points. And she's like, well, so-and-so is offering me this rate. And I said, well, did you read the fine print? And it's based on putting 30% down, it's under this loan amount, and it's based on this credit score. And she's like, oh, that makes sense. And it was charging loans, right? So those are things to just be aware of and to make sure you're working with someone that has your best interest.
So don't go to onlinemortgagecompany.com, fill out an application, you don't know what's going to be happening on the
Please
back
don't do that. Please don't.
Fair enough. That's a fair answer. All right. I feel like this is a question for both of us. Should I buy now or should we wait for rates to drop? Taylor, what do you think?
Buy when you're ready. Buy when it makes sense. Buy when you're comfortable. Buy when you're confident that you have the ability to purchase the home, pay the monthly mortgage, and have cushion. Because as a homeowner, as you know, you run into being a landlord, right? When something breaks, you have to be able to fix it. You have to be able to furnish it. And so I think that when I'm talking to people, whether it's they're buying in 30 to 45 days, they're buying in 6 months or 2 years, don't buy just because. Buy when you're ready.
Yeah, good. That's a good answer. What is that? It's marry the home, not the rate.
It's date the rate, marry the home.
Date the rate, marry the home.
Yeah. In real estate secular, I think that right now we're pretty high coming off of a few years of COVID where rates are really low, but that comes in cycles and it will come, and rents keep raising, I'm sure you see. And so you're either dealing with a little bit of a higher interest rate comparatively to the last few years for a little bit, and then you refinance out of it, but you're building equity, or you wait and just hope that rates come down. Because we don't know. No one has a crystal ball.
Yeah, on the flip side, on our end of things, I think that things are cyclical, right? I think you nailed that. Buying at a time when rates are high, fortunately in this world, it's really easy to refinance, right? If all the terms are the same, it's kind of just put it in the factory assembly line and it just comes right back out, right? So if rates happen to drop in the next 6 months to 2 years, let's say, right? You can always refinance that. Right now we're in fall in Chicago. I think this is a great time to make purchases in this industry. People are getting a little bit of fear that they may not sell in a certain timeline. So, we're kind of a little bit slower, kind of hibernating for the winter.
Right.
So I like to tell buyers, let's go out right now. Let's put some offers out. We've got a team that's ready to work right now.
Right.
Let's see what we can do.
And that's the idea of all these new loan products that are coming out to make buying more feasible for so many more people, right? There's lower down payment options. There's programs that offer more favorable rates, and that's the idea, is to have more buying power for a bigger group of people.
Okay. I have one final question. So in my industry, or the way that I do things, I work with a lot of investors, right? So I do a little bit on the commercial end with multifamily in that realm. So age-old question, what does an investor have to put down on a property, right? Like, this is different than I'm going to be living, it's my primary residence. If I just want to buy a strict investment, what are my options with you?
So, any investor looking to buy a 1 to 4 unit property right now, residentially speaking, you can expect to put down 20 to 25%.
Okay.
Now, on a conventional loan, it's usually going to be 25%. You're going to see a higher interest rate than a conventional primary residence. That's just part of the pricing model when it comes to investment properties. Depending on if they're looking for something that's full doc, and by that I mean they're putting it in their name and we're going through the whole normal underwriting conventional process. But if you're looking to do something like a DSCR loan, which is more of a cash flow type of product that doesn't include any income documentation, it's usually 20% down and 25% down, somewhere in that range. And the rate's going to be a little bit higher, but it's going to be a lot less work as far as what the underwriters are going to.
Less stringent on the buyer, huh?
Correct.
Okay.
More just as long as the property's cash flowing.
Okay.
Usually a pretty easy loan.
So going back to that, where the property kind of stands on its own, which as an investor, that's kind of what you're looking for.
Sure.
Okay.